Welcome to the recap of the 8th day of trading this Apex Trader funded account, where I'm trading with Apex's money and keeping most of the profits and none of the losses. As of this morning, the account was at 49,451, only 1,100 away from the liquidation threshold. This morning, I saw price briefly break through a small supply zone before getting squashed back down with some conviction, which indicated the presence of some strong sellers. Stochastic RSI is also overbought, so I went short at 38.88. Unfortunately, after I get filled, these strong sellers decide to not defend the supply zone anymore, and they quickly get stopped out. I can't help but think to myself that if I caught that initial rejection, I would have hit my max profit target. But after yesterday's disaster of getting stopped out of all my initial entries, I altered my strategy to try to catch the second entry, which failed this time. I watch price approach another supply zone and gets initially pushed out, once again confirming the presence of sellers here. Stochastic RSI is still overbought, so I go short again at 39.06, deeper in the supply zone to set a more conservative entry point. Well, the same thing happens as the first trade. It seems all the sell orders in the zone get filled on that initial rejection, and when buyers retest the zone, there just aren't any more sell orders, so price slices through with ease, and I get quickly stopped out again. I'm starting to regret changing my strategy to going for second entries because again, the initial rejection was the only rejection. So I thought about my new risk management process of stopping trading after losing 2 in a row, and decided that the account is so close to the liquidation threshold that it's too late to implement it at this point, as the short-term variance was just not in my favor. If I do need to restart an evaluation account, which I would continue uploading all my trades for, I would implement this rule then. As for right now, it's time to go big or go home. So I drew a new supply zone based on pre-market highs yesterday, which acted as heavy resistance leading to yesterday's huge sell-off, and I see price get heavily pushed out of this zone. Surely this big red candle is a signal that sellers have finally showed up here. Stochastic RSI wasn't in overbought levels, but it was plummeting downwards, indicating that selling momentum was high. So I decided to take another shot at going short at 39.08. And it's like deja vu. The same thing happens for a third time. Sellers get completely overpowered and the strong uptrend on the day smashes through the supply zone and I got stopped out for a third time in a row. I start flipping through other time frames to look at the bigger picture, and I noticed that the 5-minute red candles that I was using to confirm sellers don't even show up on the 15-minute chart as they're swallowed up by massive green 15-minute candles. To truly confirm the presence of sellers, I need to see strong red candles on the 15-minute chart, which I use to draw supply and demand zones anyway. After that last loss, I decided that trying to trade reversals on strong trend days, no matter where my entry is just too risky. So for trade 4, I identify a chance to go long near the end of day. The 21 EMA on the 15-minute chart had been acting as support all day, and when price finally retraces back there with stochastic RSI near oversold levels, I go long at 39.30. Sure enough, price bounces right off the support level and heads back towards the supply zone. I increase my profit level as it looks to be headed towards the value area high, but once it nears the supply zone, I get a little worried about sellers and increase my stop loss to ensure a profitable trade. I end up scalping out for $300, just about half the day's loss. I get another long opportunity at 39.35.50 when price retraces back to the 21 EMA on the 5-minute chart, which is also right above the volume point of control. I end up getting filled right before the closing bell, and I didn't trust the after hours price action since I knew Netflix was reporting earnings, which could easily tank the S&P futures if they're bad. So I quickly scalp out for $100 at the start of the supply zone. Well, turns out they were good, and price runs another 10 plus points after hours. Left a lot of profit on the table, but I gotta stick to my rule about not taking after hours trades. So I ended up with a small net loss today. I feel like pivoting from my original strategy ended up hurting me because in most cases the first entries short in the supply zones were the correct scalps, and there just wasn't enough sell liquidity for the second entries. As mentioned earlier, I think I just need to stop trying to catch reversals on strong trend days due to how risky it is. I'm just going for scalps instead of large swings, so I feel like the risk to reward just isn't there. It's just easier to trade with the trend when my indicators present entries on drawbacks. The account is now at 49,219 with a buffer of about $900 from liquidation. Once I bring this buffer back to $2,000, I'll start implementing my 2 loss in a row risk strategy. Until then, I'll continue to take trades if I see good setups, and will even look to let trades run longer if there are no identifiable resistance levels around. As always, thanks for watching. I'm clearly not an expert trader by any means, but I'm learning and refining my strategy to what fits my own risk tolerance. Uploading these trade recaps is helping me document my mistakes so I can look back and learn from them. It's also just more fun to bring you all along on this wild ride. Please like if you enjoyed, and subscribe to see if we can turn this thing around. It's time to really get serious.